This is sort of a way of going in versus just looking at the surface names, correct?
Exactly. The important thing is this is the infrastructure of what we're doing. So if we take a look at who is essential to AI, well, that's Nvidia, but then who's essential to Nvidia? And therefore you have to look at TSMC because they're making the chips. Then you have to look at ASML because they make the machines that make the chips. So you can't have AI without Nvidia right now. You can't have Nvidia without TSMC, which is more than a third of Nvidia's cost of goods sold. Same for AMD.
Even though Nvidia recently announced agreements with Intel and OpenAI and showcased a number of new products, the company's market share in China fell to 0, but its shares are up 5.7% over the last 90 days. The stock has handily outperformed the S&P 500 and Nasdaq over the past 6 months, and it is currently 86.9% higher. Reactions to the continuous recovery from the spring low, however, have been conflicting. Although some analysts have increased their price estimates, others warn of persistent challenges brought in by the uncertainties surrounding future trade relations between the United States and China, as well as the possibility of more stringent restrictions. Since releasing mixed first-quarter earnings, which one analyst referred to as a victory, Nvidia, the top artificial intelligence AI chipmaker, has been navigating a crucial moment. Although the second quarter report's top and bottom lines were excellent, its outlook did not live up to the lofty standards set. It should be noted that the chipmaker's recent advances helped offset the sharp decline in stock prices that occurred in early 2025 when it said it would incur a $5.5 billion loss related to export limitations for H20 chips to China. Resilience is indicated by the company's shift to U.S. investments in AI infrastructure. 24/7, Wall Street examines if Nvidia can maintain its comeback and spur additional growth in light of analysts' strong demand for data centers. Why purchase Nvidia stock? As it negotiates trade constraints between the United States and China and high market expectations, Nvidia faces formidable challenges. The significant write-down mentioned above occurred in the first quarter as a result of export regulations on its H20 AI chip, which was created especially to get around export limitations on cutting-edge technology to China. Analysts estimated that the prohibition might cost the company $9 billion in lost sales. The first quarter's fiscal performance would be impacted by about $700 million, with the remaining $8 billion being distributed across the second and third quarters. As competition from Huawei's Ascend chips increases, supply chain costs were also threatened by new U.S. tariffs and China's punitive actions, especially for components imported internationally. Analysts warned about margin pressure due to these issues. Nvidia's profitability is still strong, though. Due to the taxes, the company reportedly increased the prices of several of its most popular GPUs by 10% to 15%. It raised the price of high-end AI GPUs by up to 15% and gaming processors by 5% to 10% to offset rising production costs and maintain steady profits. However, Nvidia's supply chains are strengthened by investments in U.S. AI infrastructure, which are backed by its $37.6 billion cash reserve in Taiwan Semiconductor, manufacturing's $165 billion development of its Arizona fab. The agreement that CEO Jensen Huang revealed during Trump's trip to Riyadh is particularly noteworthy. Nvidia will sell 18,000 of its most sophisticated GB300 Blackwell processors to Humane in Saudi Arabia for use in 500-megawatt data centers. Furthermore, Grandview Research projects that the AI market would expand at a 37% CAGR through 2030. This helps Nvidia reach its revenue target of $170 billion in fiscal 2026, which is 30% more than the $130.5 billion it made in 2025. Nvidia reported a record $46.7 billion in sales for the second quarter, of which $41.1 billion came from its data center division. Due in large part to the fervent demand for its AI chips, the total increased by 56% year over year. In fiscal 2025, the chipmaker made $3.2 billion in capital expenditures to develop the infrastructure for AI and Blackwell accelerator production. To fulfill hyperscaler demand, the company's capital expenditures have increased by more than 200% this year, reaching over $3 billion. Trade restrictions between the United States and China continue to be risky. Even with a possible thaw, tariffs could increase prices, which would account for the purported price increases. Nvidia's adjusted operating income of $25.1 billion was canceled out by a 39% increase in operating expenses to $3.7 billion for R&D. However, data centers are not the only factor contributing to Nvidia's rise. Thanks to alliances with Toyota and Aurora Innovation for autonomous vehicles, the company's automotive division grew by 103% year-over-year to $570 million. In light of tariff uncertainty, this diversifies Nvidia's holdings. Nvidia's third-quarter fiscal revenue is expected to be $54 billion, give or take 2%. No shipments of its H20 chips to China are assumed in this forecast. For Nvidia shareholders, this year has been somewhat turbulent. In April, the stock fell to $86.62, a 52-week low. The share price rebounded following the first quarter results and an apparent halt in U.S.-China tariffs. It recently reached a record high of $195.62, bringing the market capitalization of the corporation to about $4.8 trillion. Analyst sentiment is still optimistic, even though at least one officer is still selling stock. 10 of the 64 analysts that follow the stock have strong buy ratings, while the other 59 advise purchasing shares. They now have a consensus one-year price target of $218.51. That aim indicates a potential upside of more than 20% from the present price. The current range of targets is $100 to $320 per share. With a street-high target price, HSBC upgraded the shares to buy. It highlighted Nvidia's significant earnings potential by 2027, as well as the growing demand for AI chips. Mizuho and Cantor Fitzgerald both recently kept their buy-equivalent ratings. Nvidia was well-positioned for success in 2025 thanks to its leadership in AI, 93% growth in data centers, and automotive alliances with Toyota. But care is needed due to tariff risks and DeepSeek's competitive AI algorithms. Nvidia's financial buffer and Stargate project role provide stability, while the rise of the AI market and the chipmaker's $47 billion second-quarter revenue position it to reach its $170 billion full-year revenue target. However, there are still issues with value. Growth-oriented investors should purchase Nvidia, but others should proceed with caution. Nvidia's year-end price forecast of $194.30 per share, which represents a 7.3% increase from the current price per share, is set by 24/7 Wall Street. This estimate takes into consideration anticipated Blackwell supply restrictions, DeepSeek competition, and tariff threats. It also takes into account Nvidia's dominance in AI and its revenue projections for the second quarter of 2026. The target estimate shows a cautious but reasonable view because it is lower than the analyst's mean. Is a regulatory crackdown on Nvidia's AI empire inviting after the OpenAI deal? In a recent CNBC show, Tom Lee of Fundstrat reaffirmed his optimistic assessment of the AI rally, stating that the market continues to underestimate the potential impact of AI. Lee refuted the idea that a market meltdown similar to the dot-com boom is imminent. As you may know, there is a situation where somebody may say something flattering about the market while actually being extremely pessimistic. People may be accepting that the market is strong, but they are also attempting to signal the end of that surge when they say things like, "Oh, well, this reminds me of 1999," or, they're ringing the bell on top of AI stocks. As an analyst in the 1990s, I believe that people tend to forget that Cisco's PE reached 200 in September 1998, after it had been at around 60 when the Fed made its first cut in 9 months. The company in question is Nvidia, which is currently trading at about 27 times forward earnings. Its PE is lower than that of Walmart and Costco, which are roughly 35 to 50 times higher. I simply believe that while markets have embraced a lot of positive news, it isn't always priced into them. According to Jensen Huang, Nvidia holds over 90% of the GPU industry, which is projected to grow to $324 trillion by 2030. According to McKinsey, data center capital expenditures will reach $6.7 trillion with no immediate downturn in sight. Nvidia has a software advantage in AI computing with its CUDA platform, which is now the de facto standard for AI programming, and its next-generation GPU series, Rubin, which is scheduled for release in 2026. Nvidia's most recent AI-driven devices, including as the RTX 50 series gaming chips and Nvidia's Blackwell AI architecture systems, incorporate Micron's high-bandwidth memory chips. New levels of performance in consumer and enterprise AI are made possible by the partnership which enables NVIDIA's GPUs to manage AI workloads and graphics simultaneously. Huang noted in his CES 2025 presentation that Micron's memory, which can reach up to 18 gigabytes per second, is essential for optimizing NVIDIA's AI technology and accelerating and scalably developing future AI systems. The direction of AI hardware is indicated by the expanding NVIDIA-Micron partnership. Memory and GPUs must now develop together. Given that the HBM market is expected to reach billions of dollars by 2030, Micron's advancements position it as a major supplier in the AI chip industry and bolster NVIDIA's ambition to control both AI hardware and the larger AI infrastructure stack. Through dividends and buybacks, NVIDIA's stock has given its investors an astounding $83 billion in cash returns over the last 10 years. Given that NVIDIA continues to lead the AI silicon race and has generated over $75 billion in operating cash flows over the past 12 months, the rewards are only expected to increase. Due to record data center revenues and its sustained dominance in AI platforms, NVIDIA's stock has outperformed its sector peers and reached a 52-week high in early October. Large language model training and enterprise AI deployments are now powered by the company's accelerated computing solutions, such as its Hopper and Blackwell GPU platforms. NVIDIA's data center revenue growth was mostly driven by governments and hyperscale cloud providers, highlighting the strategic significance of autonomous AI partnerships. By laying the groundwork for upcoming public and private AI initiatives in the fields of health, education, transportation, and finance, the Dominican Republic Agreement may strengthen NVIDIA's position in emerging markets. NVIDIA will be able to meet downstream demand for inference and enterprise AI workloads in the Caribbean and Latin American regions by integrating its hardware and software stacks at CEIA. Through training initiatives, regional hosting of AI models, and the possibility of recurrent purchases linked to model scaling and refresh cycles, these government collaborations help support NVIDIA's total addressable market narrative, exhibiting strategic stickiness. By demonstrating non-US growth vectors and confirming NVIDIA's platform as a fundamental layer for national digital transformation, these partnerships improve investor sentiment. The CEIA in the Dominican Republic is one of several well-known government initiatives to speed up AI infrastructure. NVIDIA accelerators are essential to Saudi Arabia's Neom AI labs and the UAE's G42-backed AI campuses in the Middle East. Multi-year GPU supply agreements have been signed by Asian hubs in Singapore and India to support sovereign cloud offerings and smart city ambitions. Other Latin American countries are investigating similar centers of excellence, and the European Union is also allocating funds to HPC clusters constructed on NVIDIA GPUs. Developing a skilled AI workforce to fill talent shortages, protecting national security through digital sovereignty, lowering dependency on foreign cloud services and related expenses, producing high-value digital exports, and keeping R&D in-country are some of the reasons why sovereigns pursue these initiatives. These initiatives successfully increase long-term demand for NVIDIA's GPU platforms by making the company the go-to source for government-led capacity expansions. In addition to initial hardware deployments, NVIDIA gains from model training frameworks, software subscriptions, and iterative hardware upgrades as each additional AI node goes online. These benefits reinforce a positive cycle of adoption and platform entrenchment. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And KG, I can't think of a better person to have this discussion with, talking quantum computing. And I was just looking. Nvidia, we've crowned this stock for good reason. It went from adjusted $11 about to almost $200. But I key in RGTI, and I see an even more impressive rally. What do you make of these stocks?
Look, I mean, there's still a lot of optimism when it comes to quantum computing, and it's still in its infancy stages. Now, obviously, we saw the news overnight of the potential of the U.S. government investing in some of these names, the Rigettis of the world, and you have others, D-Wave, things of that nature here. But we have seen the U.S. Commerce Secretary in their office really kind of denying that claim, at least for now. Now, the optimism when it comes to quantum computing is just the processing power that you could potentially have. Now, we do have the concept that's already working right now, but there is a several different hurdles. It's not only the materials to spin up a quantum computer, but it's also the cooling mechanisms as well. But the optimism is that you are able to process items a lot faster. You could also have tasks as far as security tasks and things of that nature, or to be able to hack into certain systems could be a lot quicker when it comes to quantum computing. So you are seeing a lot of investors trying to think about the next phase. Now it's not so much AI, that's already here. Now the next phase is going to be quantum computing potentially, and that's why you're seeing a lot of investors and traders trying to get into these names, trying to get in early, because maybe you're going to find a company like an Nvidia where it does actually crack the code and is able to actually expand and leverage this in a commercial space, which obviously is where a lot of the profitability is going to be.
Primary names that we discuss when we're thinking just pure plays into quantum. We mentioned Rigetti, that's RGTI. You got D-Wave Quantum. You got IonQ. But forgive me, KG, what you just described sounds like extremely expensive in terms of R&D. We know the compute power that you'll need. We know the access to some of these, AI chips, etc., the cooling racks, the storage space, the data centers, whatever it may be. Maybe I'm naive because so many things have been, I guess, innovated from startups and out of garages. But maybe this time's different, just given the hurdles and the barriers to entry and what you need to even start the work on this. Am I crazy to think that one of these mega caps is probably more likely to make a breakthrough first?
I don't think you're crazy to think that. I mean, obviously we talk about these quantum names, as you just kind of recalled, but you also look at some of the established companies that have exposure to this space as well. You have Google, Google Alphabet, if you will, Intel, IBM. IBM's had exposure to quantum computing for the last 15, almost 20 years now. So there's well-established names that are looking at this concept. But when you're looking at technology, especially a space like this, a lot of the breakthroughs actually happen in the education field rather than in the commercial space. Now you're trying to make it in a situation, especially if you're able to get this up and running, to commercialize it. But I think right now, just trying to figure out the concept and trying to get these concepts and scale it up enough to be able to do task, obviously, is going to be that first hurdle. And then let me go back to once again saying it's not only just the concept itself, trying to get this to the next phase in the physical realm, if you will, but it's also the cooling aspect, Alex, and that is actually a very big hurdle. So much so that you are actually seeing the Defense Department having maybe some discussions with a lot of these bigger companies to see if there could be an application of actually putting a quantum computer into space in order to leverage space for the cooling. So it's not only just trying to get it up and running, but how are you going to cool this thing? It's really, really hard, but it is actually something that's very unique. It's something that's very hard for a lot of people to really kind of understand, but I think over time you will see technology continuing to exponentially improve, and quantum computing will get there at some point. We just don't know when. Just like artificial intelligence, we are seeing things now that are being implemented that 3 years ago, 4 years ago, we were thinking it was going to take 10, 20 years. So we just we'll see this actually come to fruition here. And a lot of these companies are obviously trying to get their name and their products into the space, and one of them will be a winner. We just don't know who it is.